Hello friends, I am Sumit. Welcome all of you on my channel Train Your Unique Brain. Our series of accounting capsule will help you learn accounting. This video is for those people who want to learn accounting and recently set up a new business and they want to know about accounting. So let's start about the introduction of accounting. Like today era is the era of the business and it has become a very important to learn accounting because business is increasing rapidly day by day and it also become a difficult. It is not possible for any business or organization that it can remember all its accounting transaction for a long time. How much purchase is being done in it, how much is being sold, and whether profit is being made in the business or not. It is very important for a business to know about all these things, so a written proof all the business transaction is kept or information is being in writing. It can also be understood in this way that whatever transaction are done in a business, or say that all the transaction are done day by day with the date wise in a systematic way. Records are made so that it can be found out whether there is a profit or loss in the business, and a report can be prepared. You know that whether the small or a big business does not know how many transactions happen in it, and to note all these transactions we need accounting to keep their records. Earlier annual accounting was done in which the accounts of their accounts were kept in a register, but today everything has changed with the passage of the time. Today the world has progressed. Nowadays all accounting computer are being done with the help of the different accounting software. For example, by using a Tally, SAP or other similar accounting software, you can maintain and manage your account very well. Today is not possible without accounting that one can run their business smoothly. Now accounts are maintained in the professional way. This we can understand this through a very easy example. There is a person who want to do business. He want to open a new shoes shop or a showroom. uh, for that, this he will first set up a shop. That means he will take it on rent, and then after that he will contact with the wholesaler or contact with the distributor. He will also need to advertise his shop so that people can know about his shop. There will be expenses for the lighting, etc. Then he will keep an employee for like to pay, have a salary, buying shoes from the company, selling them to the customer. There will be a many such activities. Now it is important to understand here that now the shoe shop or a showroom that it's opened would definitely want to know how my business is doing, in this profit is being made or not, how many expenses did I have, and if I want to find out the correct profit, how much was the actual profit. So he has to keep the details of all this thing, that how many people he has purchased a goods on a loan, he has to pay now, and how many customer are there who have sold on credit and they have not written the money yet, apart from paying the bill of the lights, traveling expenses, time advertising expenses, and other similar expenses that have happened in the business, and it is not possible to remember them all. That's why it's very important to note all these things, or become it very necessary to record them. So there is a need for accounting in which we record all our financial transactions. So as the transaction happen, we will keep them. We keep on recording. So now it's come to where do we record it. Now we will discuss it further. This was an introduction so that you can understand a little bit of accounting. Now we talk about, like, accounting is a language of business. It is a system of recording, summarizing, and analyzing an economic entity. financial transaction. Effective communicating this information is a key to success of every business. You must have heard the name of the Luca Pacioli. Luca Pacioli was the first person who discovered the double entry book system and also published the book in a detail. He was also an Italian mathematician. He is also known as the father of accounting and bookkeeping. Now we will talk about the definition of accounting. First definition, as per the American Institute of Certified Public Accountants, has defined accounting as the art of recording, classifying, and summarizing in a significant manner in terms of money, transactions, and event which are in part at least of financial character, and interpreting the result thereof is called accounting. Now we discuss about the second definition of accounting as per the American Accounting Association. The process of identifying, measuring, and communicating economic information to permit perform judgment and decision by users of the information. That means these are the definitions of accounting. First we discuss about the identifying. By identifying, it means to identify the correct transaction of the business. For example, which transactions are related to the business and which are not. That is to identify one those transactions which are related to the money. Then we talk about the recording. Recording means that whatever the process are done in the business, whatever transaction are done, whether purchasing or selling or paying expenses, them all these are recorded date wise. This process of recording is very systematic in a small business where transactions are done. All transactions are first recorded in a single book which is called journal. But in a big business where the transactions are very high, a separate account book is made to record them, which we call subsidiary book. For example, like we purchase book for making purchase, sales book for sale, for a cash transaction, cash book, etc. In this way we process of recording become easy. Now we discuss about classifying. Now whatever transaction has been recorded, all of them are classified their own places, respective head. That is, whatever transaction happened related to the different items, they record them by making a different heads. Transaction of the same nature are recorded by creating a separate accounts in a group at the same place, and these different account are open. It is called ledger. Any person, customer, or supplier, their separate account is also open. The way of purchase, sales, or expenses are open. For example, like purchase account, cash account, salary account. If you are paying a salary in a cash to an employee, then we will create a separate ledger of salary account and cash account. By doing this, we get complete information about each individual account. Now we discuss about the summarizing. Summarizing is an art of presenting classified data to the management and user in an understandable and useful manner. Like meaning now all of these transactions are recorded. A summary form of these transactions is prepared in a financial year. In short, all the things are explained in form of summary so that it can easily understood. Can go in this, like the balance of the all ledgers account is extracted, and with the help of the these balances are also called the trial balance is prepared, and then we will, with the help of the final account is prepared, in which trading and profit or loss account and balance sheet is made. Then we talk about communicating. Now the financial transaction that has been recorded, it being classified and summarized, it is conveyed to the authorities to main user who need it. For example, communication with them so that they can analyze those information and you can take the important decision. Now you must have easily come to know about the accounting. In the next video you will understand why accounting is the important for the business or any organization. What is the importance? uh, this is all about the introduction of accounting. Thank you so much. If you like our information, then share, subscribe, and like.